Hi, and welcome to the second video where I'm going to run down ideas and concepts and hints on how to perform better in the simulation, because I really want everyone to do well with this and earn all their points. So last video I looked at how to do better moving from round 1 into round 2. Now this video I'm going to look at how to do better moving into round 3 from round 2. And this is the last video where I'm going to actually show you inputs and input the information because a lot of people, quite frankly, just copy my inputs. And that's not what the goal of this video is. The goal of this video is to inspire you, give you some concepts and ideas, and help make your gameplay even better than what I'm showing you here. And just give you a better feel for what you're trying to do in the simulation and what businesses do and how this, how the goal of maximizing shareholders' wealth that we learned in the textbook plays out in the simulation. Okay, so remember, click here, and you'll get a pop-up that will show you the schedule. Now, this may not be your schedule, but you can click this to see what your schedule is. And for some courses, the schedule is quite frequent for when the game is going to be processed. So you have to make sure that you don't miss a round, because if you miss a round, I have to force you forward and it just copies over last year's information to this year, and you have no chance of improving on your inputs. So make sure you set your calendar and make sure you know when the due dates are for the round. So let's go to the overview. So here is the year 1 results, and now it's being compared to my new year 2 results to see what my overall points are. So this stands for year over year, and I was able to increase my revenues per share of stock by 45%, rounded up. So I got about 45 points. Now my quick ratio and debt ratio, my quick ratio here went up, so that means I have more short-term current assets, went up by 7 points, and my debt ratios went down. So when your debt goes down, that's good, and I decreased my debt by about 26%. Even though this is not calculated right here, but this is calculated correctly. So my profit margins, I was able to get it up just a tiny bit because it was a building round. So I really wasn't. I knew that it was a round where I was trying to build my ability to increase my profits, and I wasn't able, since I had such a large leap in profits from round 0 into round 1, it was hard to really improve my profit margins tremendously in year 2. That's not the same for every company, but for me, because my profit margins are already high, I used the money that I generated from those profit margins to invest in the company in year 2 to make year 3 a little bit more profitable. So I have to try to beat this average of 59% when building the cars this year. My operational went up about 1%, and my net went up about close to 2%. Okay, so if we look at the next categories here, of course, since my profits are sort of, I would say, kind of flat or up just a little bit, my other profitability measures, total asset turnover, return on investment, return on equity, earnings per share, these 3 here were lower. Return on assets, because my assets grew faster than my earnings, and my equity was growing faster than my earnings, so I lost some here. But then my earnings per share went up 47% because I did increase sales and overall total profits. My return on assets was down 3%, again, because I grew my assets a lot. I expected that because I bought a lot of operational investments last round. My market cap went up by 97%. My book value went up by 67%. And my forecasts were improved at 100%. So my forecasts weren't so great in year 1. They were better in year 2. So I got some points from that. And I had my operational investments, which gave me 100 points. Now I increased it. As long as you increase it by 100%, I did it by more than 100%, but 100 points is the maximum I can get. And I had a cash surplus, so I got $100 for that, 100 points rather. So my total points was 482, which is fine, which is great actually, because if you're trying to get to 2,500 or 2,600 points, making about 400 or 500 points a round will easily get you there. So I count this round as success. And if you look at the previous round, I was coming off of, if I go to the industry page, and I'm just going to search for Fun Time Autos, I can see here that I made 1,000 points in round one, which is really great. And then 482 points in round two, that gives me a total of 1,500 points already. I'm more than halfway to my goal of 2,600 points after 2 rounds. So I'm doing very well. And I could see here, so we'll come back to the industry page later. Oops. Let me get to the top here. So let's go. So I'm done with the overview. I did okay with the points. Now I'm going to look at my assessment. So in here, this is where you can go for each category, see how you did as far as 1 to 5 stars, your percentile rank, and this ranks you against, I think, 5,000 other teams that played the simulation in the last 5 years. And my score is excellent for revenue. And then you can kind of go through all the mains. And this gives you ideas. If you didn't do well in a score, you can ask why. So again, like total asset turnover, I did very poorly. And I realized I did poorly in total asset turnover because I'm building a company. I'm spending a lot of money in assets. Total asset turnover will start to turn around once I start converting those assets to more profits. Then you can go to the charts page. And on the charts page, you can see a leaderboard of the current points and all the key statistics for all the teams. And then you can look at all of the charts that look at the industry, which is all the companies, your marketing, your sales. The team performance is important because you want to go to that team performance chart. The very bottom will show you your market potential versus sales. So I'm very close on the economy. Looks like my sales, I met all the potential on sedan. Although truck, I was short by about 157, and luxury I was short by 182. So I gave up those cars, and other car companies took over those cars. Now, one reason I did pull back a little bit in truck and luxury is if I bought a whole new production plant for $10 million just to make 157 cars, that would have put me in more debt, strained my return on assets even more. So I voluntarily kind of gave up some sales in truck and luxury because I didn't want to spend $20 million in 2 new manufacturing plants because my capacity utilization would have been low. And that strains a lot of my overview points would have been strained if I did that. So I purposely, as a strategy, did that. Now the industry page is where you can go see all the other competitors of the classes have done. What have they done? What are their points? What are their how do they build their cars? What's their market potential? So here is your research. You do research in here to get some ideas about what some of the best car companies did. In the 80s, when GM, Ford, and Chrysler were failing, they all took turns going over to Japan, viewing their factories, reviewing their results, seeing the equipment they were buying to try to become competitive like the Japanese automotive companies at that time. So it's sort of like the industry search is sort of, that type of due diligence you're doing. Your financials are here that you can review, and then you start again in year 3 now, or Y-3, or I call round 3 or year 3. We're now in a new year. And again, customer expectations have increased. So customers, this is realistic. Every new model, you have to offer something new to make the car a new model. So, and customers start expecting that the car will be better. So this is sort of a reflection of the real world. Now, a key thing here for economy class is I went from $1,200 to a $3,600 cost reduction. So when I build my car, if I'm spending $3,700 in material, it's only going to cost me $150 due to this reduction. So this is going to help me to maintain my profit level. So I'm going to increase my statistics on all of on everything I can. I'm going to try to increase my statistics here. My decisions have everything try to be a little bit better to give consumers what they want in experiencing a better car. And I'm able to increase my profit margins from 51 to 58%, which is a really good update on my margins. And now, as far as the forecast, what I had said to do previously was what I like to do is check the student manual and get an idea of, they have this nice chart here. It gives me an idea for year 3. I'm going to write this down. I could probably expect to sell 3,400 economy, 44, close to 4,400 sedan, 2,600, 3,100. Okay. So I see this big bump up because of these growth rates. The market is increasing quickly. So I want to capture that business. So I'm going to go ahead and I'm going to say 34. Maybe I'll just pull it back a little bit because I don't think my cars are top end that they're going to demand the most. So I'm going to rebuild these. And again, I'm going to try and get these up a little more. I want a little bit higher because my goal is to get okay, so it looks like it's about the best I can do. So I'm getting up from about almost a 5% increase, which I will take that. Okay, try to get close to 5%. And then down the truck, again, okay, so the truck here, we have a problem. Not able to increase. So let's see what I can do here. Yeah, so the truck, it looks like my truck is not going to really increase profit margins too well. I'm going to lower my expectations of sales below what the average sale is because I'm going to have to really try to pump up my operational investments in the truck area because I really was not able to make much of an increase in the overall profitability of the truck. Okay, so let's see. And the same thing for luxury. All right, so I'm trying to just monkey around with some of the statistics here to try and get things to be a little bit. So I got a little bit of increase. Okay, so I did get my profit margins up, and I'm trying to always get them up, hopefully on average 5 percentage points if I can. It's hard. So now I come to the marketing, which I'm going to pause because this takes a while to do, especially using the input from the student manual. So I'm not going to bore you while I do that. I'm going to pause it, and I'm going to meet you back in production. Okay, so I submitted my marketing data, and here I'm going to have to buy a new production plan for economy. And because my profit margins are good for economy, I'm going to, buy the extra plant. So if I look at my capacity utilization here, and I take my current production and I divide that by my plant capacity, and I get 82%. Yeah, I try to stay above 80% of my capacity utilization. And now I'm going to increase my operational investments again, reinvesting some of that money. Here I'm going to have to buy another production plant for a total of $4,000 because I have to build. I always want this excess shortage to be zero. And again, let me invest here. Okay. And then, so this is going to be an expensive round. I have to buy a lot of production plants to keep myself in business. I'm only hoping that I have enough retained earnings to pay for all this. But I am a more profitable company. So because I'm making these investments now, my return on assets and total asset turnover will suffer, but my profits and profit margins will go up. So I'm doing sort of a trade-off because I can't be a winner in every category. So let's see here. Good. So I still have somewhat of a surplus available to me. And I'm going to buy back just a little bit of stock here with, and I'll keep my debt as it is right now. And I still have a $10 million surplus, which even at a $10 million surplus, that's a gamble. If I don't sell all the cars that I'm forecasting, I could wind up with a deficit, but I'm gonna risk it at this point. If you really want to be sure, keep 20 million in there, then you should probably be pretty good not to have a deficit. So I'm going to complete year 3. Now here, year 3 has been completed, so that's good. Now let me go back and review. And I'll actually make a separate video to kind of review some of the team activity and show you how the companies in your class have been doing. Okay, I'll see you for that video. I like to keep these videos somewhat short. Take care. Hopefully you found this helpful.